look at the market today for May 19th, 2025. And we had the ratings downgrade over the weekend, Friday after the close, Moody's on the U.S. credit rating from AAA to AA+. Now, this was big news in the political world, but if you look back in history with other downgrades, it caused near-term volatility like you saw overnight, even this morning. But ultimately, it didn't matter much because, what Moody's or S&P says typically doesn't matter a whole lot what other people are thinking when it comes to the credit quality of the United States. They've known about our fiscal situation, obviously our political situation, all of that. So I was not a believer this was going to be a market moving event for anything longer than 24, 48 hours. And the reality is, once markets opened, they rallied really from the jump and actually closed positive. Not big, but positive. Both the NASDAQ and the S&P were up 9 basis points, 0.09% on the day, 5 points for the S&P, 19 points for the NASDAQ. The Dow did a bit better. That was up 137 points, about 1/3% there. And certainly a mixed bag if you look at kind of the heat map here. You have Apple down over 1%, Tesla down over 2%, but Microsoft up 1%, Broadcom up nearly 1%. But a lot of gray, a lot of neutral, a lot of no movement. Which last week was OPEX. We have VIX expiration on Wednesday, so I think you could get more volatility after that. But there's really not a lot of economic news this week. There's some earnings, but we're kind of at the tail end of earnings season as well. So it really comes down to not a whole lot of real market moving potential events. You did have Scott Bessent over the weekend talk about, hey, if these countries aren't negotiating in good faith, that they would go back to the April 2nd tariff levels, et cetera. So kind of still playing a bit of hardball on the negotiation front. So what you can see is there's probably still going to be a lot of headlines, a lot of volatility around the tariff negotiations. And, I think you could easily see something spark more volatility over the medium term. And so, I said this over my Saturday video, we're certainly above levels that were important for markets. Around the 5,700, 5,800 level on the S&P was that big resistance up till about 6,000. And right now we're at 5,963. So I think as long as we stay in this 5,700 to 6,000 level, that is generally going to be bullish for markets. If you start breaking below 5,700, that will be negative. That will show you, okay, we had a downtrend. It might have been a strong rally, but it's still a lower high. You have lower highs, lower lows, big volatility, but still generally in a downtrend. If you consolidate here right below, kind of at resistance, this is just gaining power to move higher. Now, a lot will depend on what happens with the big, beautiful bill and the tax cuts and spending. That will be very important. Obviously, Fed announcements and what the Fed is going to do will be important as well. It seems like they're on pause as of now for at least a couple of more meetings to get more economic data from these tariffs and disruption and supply chain disruptions, all of that. Remember, the economy generally moves slow. It doesn't fall off a cliff all at once. It tends to its trends kind of build on itself, and then you get something that is really, really durable. And it becomes hard to turn the economy around in both directions, from when things are going well as when things are going poorly. And so, I think that's what you're seeing now is economies, some more headwinds from the tariff news, but ultimately the trajectory going into this year was generally positive. And despite that negative print in the first quarter, that was really trade driven. It really wasn't anything to worry about. If you back out net exports, we're still growing 2-3%. So it was overall fine. So not a whole lot to worry on that front. Let's go back and take a look at the other assets today. You did have treasuries were mixed, but well off its worst levels. The 10-year earlier crossed above 4.5%. While the 30-year topped at about 5%. So we're still kind of pushing on the upper bounds of what I think the market will worry about. But we kind of saved. The market was saved today and didn't really break out on the yield front. So we'll see. It doesn't mean we can't break out in the future. But so far, the reaction to this downgrade, not a big deal. The dollar was down 0.7%. Gold was up 1.5%. Bitcoin up 1.2%. And WTI up about 0.3% on the day. So very interesting day. But in the end, really not a whole lot of movements across markets as we head into a new week. So it'll be an interesting one, and stay tuned for more.